there, and welcome to Talking Self-Managed Super. I'm Liv Long, founder and CEO of SMSF AI, and I'm passionate about all things super. During the past 21 years running specialist SMSF firms, I've helped over 10,000 trustees take control of their financial future. Today we're tackling a topic that doesn't get nearly enough attention in the SMSF world, and that's insurance. Now, I know what you're thinking. I've got my investments sorted, my super's growing. Do I really need to worry about insurance? The answer is absolutely. And if you're running an SMSF, it's not just a good idea, it's actually a legal requirement to consider insurance as part of your fund's investment strategy. So let's break down how insurance works inside a self-managed super fund and why getting the right advice from an insurance specialist could be the best financial decision you'll ever make. Most people don't realise that when you leave a retail or industry super fund, you also leave behind any default insurance cover that came with it. That means unless you've actively set up insurance inside your SMSF, you could be totally exposed. And let's be real, if something happened to you or another member of your fund, would your family, your business, or your financial commitments be covered? So if the answer is no, it's time to sort that out for you. All right, so there are three kinds of insurance you can actually have inside a self-managed super fund. The first is life insurance, which pays a lump sum to your beneficiaries if you pass away, making sure that your loved ones aren't left struggling. 2, total and permanent disability insurance, or TPD. So if you suffer a serious illness or injury and can't work again, this provides a payout to cover expenses and any lost income. And we have income protection insurance, which covers a portion of your income if you're temporarily unable to work due to, say, illness or an injury. So holding these policies inside your SMSF means that the premiums are paid for from your super balance, so you're not actually paying out of pocket. And in some cases, it can actually be more tax efficient than holding insurance personally. Now, here's where things get really important. Insurance inside a self-managed fund isn't a set and forget thing. You need to get the right level of cover, structured in the right way, or you could be paying too much, or worse, not getting it actually paid out when you finally need it. Now that's why working with an insurance specialist is key. They will help structure policies for tax efficiency, as some payouts are taxed whilst others aren't. But an insurance expert can help make sure your policy is set up in the most tax effective way. Because what's the point of going to the hassle of arranging cover only to have to pay tax on it? An insurance specialist will make sure you're covered properly. Too little cover and your family could be left short. Too much cover and you're potentially wasting money on unnecessary premiums. So they will tailor the policy to your personal situation. Now, if you're self-employed or if you're running a small business like me, your risks and insurance needs are different from a standard employee. A specialist can help customise your cover. So they'll ensure compliance with the SMSF rules because your SMSF's investment strategy must consider insurance. And having the right documentation in place is key to keeping the ATO happy. Before we wrap up, here are my top tips to make sure you don't mess up when it comes to your insurance. Number 1, don't assume your old super insurance carries over. It doesn't. Once you move to an SMSF, you need to actively set up your cover. Number 2, review your policy regularly. Life changes, whether it's starting a business, having kids, or paying off debt. So your insurance should change too. 3, don't ignore the tax consequences on payouts. Get advice. Be prepared. Nobody ever thinks it's going to happen to them. But financial security isn't about expecting, it's about preparing. At the end of the day, insurance is about protecting what you've worked so hard to build. So whether it's making sure your family is taken care of, your business can continue running, or you have an income if you can't work, getting the right insurance inside your SMSF is one of the smartest financial moves you can make. So if you haven't reviewed your SMSF insurance, or worse, don't have any at all, now's the time. Talk to an insurance specialist, get the right cover, and sleep a little easier knowing you and your family are protected. Got any questions? Drop them in the comments and let's chat. I'll see you for my next episode, which answers the big questions. What are the costs involved in running an SMSF? Until next time, take care and take control.